Bloomberg Audio Studios.
Podcasts, radio, news.
Novartis, Anna, coming in with a pretty hot share move this morning.
Yeah, absolutely. The Novartis share price up by 4.6% as the company upgrades guidance and in some style, upgrading the sales line and the core operating profit line. Let's talk about optimism for 2024 then with Vas Narasimhan, who's the Novartis CEO and joins us right now. Vas, very nice to have you on the program as always. So you've upgraded your guidance today, expressing some confidence, some clarity perhaps around the threat from generic competition. Does this push challenges into 2025? Is this what we're seeing here, or are you just broadly more positive about the outlook?
I think, Anna, we're broadly more positive about the momentum we're seeing in the business. One, we saw very good performance across our growth drivers, both established medicines like Entresto and Cosentyx, but very strong growth from our recent launches, Kesimpta, Kisqali, Victo, Leqvio. So when you have that broad base of medicines all growing really well, it gives us confidence for this year, but also for the years to come. In addition, we saw our performance broad-based from a geographical perspective. Very strong performance, U.S., ex-U.S., Europe, China, Japan, also giving us a lot of confidence. So while there was a small contribution from generics getting pushed out, we're reiterating our confidence in our 5% plus sales growth guidance out to 2028 and our 40% plus margin guidance out to 2027, along with the various guidance raises you just mentioned.
Can I ask you about Pluvicto then, Vas? This clearly one of the drugs, a cancer drug that you have high hopes for. It does seem as if sales came in perhaps just a little shy of expectations, but I wonder if this reflects a broader concern about convincing the market to pivot towards a new type of targeted radioactive therapy. Are you concerned about how long it's taking to convince the market that this is the way forward, or do you not have concerns there?
No concerns. We feel very confident about the Pluvicto outlook. We saw strong quarter-over-quarter growth, and it's important to note we're just now coming out of a supply disruption we had last year. Now in the first quarter, we had 99.5% on-time delivery of the medicine. We're seeing a broadened base of growth in the United States from treating centers that are getting comfortable with this new technology. It is a very novel approach, and so oncologists need to understand they can refer patients for this therapy, radioligand therapy, for prostate cancer patients. The other opportunity we have in the second half of this year is this medicine will go global. We'll have the opportunity to take Pluvicto outside of the U.S. at scale, and that will give us further growth. The most exciting part of the Pluvicto story and our radioligand therapy story in general is moving into new cancers and new cancer settings. So with Pluvicto, we confirmed earlier this year that we will file for the PSMA4 setting for Pluvicto. That will allow us to broaden the indication base. And we've also done a number of deals and have in-house programs to bring more radioligand therapy forward. So we think this will be a significant market opportunity for the company.
Faz, good morning, it's Guy. So a big beat and a big raise, and the market likes it. What gets you the big beat and big raise in 2025? What are you most excited about? What's going to deliver the same performance that we're seeing now next year?
A couple of things, guys. So one, these growth drivers that we have that are really taking off with new indications. So you have Cosentyx that really outperform and a significant outperformance in quarter one. And that's driven off new indications for this medicine. And this is a medicine we expect to be $7 billion plus over time, by the end of the decade. Cosentyx will give us a lot of momentum. And then you have this group of recently launched medicines that are going to get new indications. So you have Kisqali, you have Pluvicto, you have Scemblix, you have Iptacopan. Each one of these medicines, we believe, have multi-billion-dollar potential. They have new indications coming over the course of this year or early next year. That gives us another wave of growth. And then also exciting is we have a full pipeline. We had 10 positive phase 3 readouts in 2023.
Yep.
And as those readouts now come into submissions, that will give us the third leg to grow through the end of this decade.
Can I ask you a slightly sort of left field question this morning? Is Novartis still a Swiss company? Yeah. Let's keep you on your toes. Is Novartis still a Swiss company? I know where you're based, but you've now got an Italian, Swiss, American-Italian chair coming in. I'm wondering how that's going to change the culture. You report in dollars. You're domiciled in Switzerland, but increasingly you don't feel like a Swiss company. Certainly maybe compared with Roche. Your CFO is still Swiss. How is the culture of the company going to evolve going forward from here? Is that Swiss heritage still strong, or is it being diluted, do you think, at the moment?
You know, Guy, it's interesting. We have deep Swiss roots. This is a 250-year-old company that's roots are in Switzerland and will remain in Switzerland. But we're also a global company. And the interesting thing is we've been a global company for over 100+ years. And so we want to maintain that global footprint, global talent, get the best people into the best roles while still maintaining our Swiss roots. And I think we strike that balance well. We have a few members of our executive committee who are Swiss citizens. I've lived in Switzerland for a decade plus. And so I think we have those deep Swiss roots. But it's important to remember we are a global company. We compete in global markets. For our shareholders, they want to see a world-class global leading pharmaceutical company, and that's the balance we'll keep working to strike. But I sit here in Basel today, and that's where we're going to stay.
Faz, it's Kriti. Talk to us a little bit about the cash on your balance sheet here. There's a lot of positivity coming from you this morning, from your share price as well, even from the analyst commentary off these results. Talk to us a little bit about where you stand on, one, buybacks, and two, restructuring. Does that continue?
Yeah, we have a really strong cash position, and we feel really good about our shareholder-friendly approach to capital allocation. We maintain an approach of bolt-ons, and we look at really sub-$5 billion bolt-ons. But if you look at most of the deals we've done, they've been in the sub-$1 billion space, and that's where we want to stay. We have an ongoing $15 billion share buyback that we expect to complete over the course of next year. And we continue to see buybacks as a critical part of our capital allocation strategy. The strong and growing dividend in Swiss francs will continue, and we maintain our investments in the business. In terms of restructuring, now what you see in the company is just ongoing adjustments. We completed a major reorganization a few years ago, and that's bearing fruit. I mean, that's what you're seeing in the financial performance and overall operating performance of Novartis. But we also recently announced a few other adjustments in our R&D footprint, and that's, I think, normal course of business. We'll, of course, always make those adjustments. But we think we're set up in the right way now through the end of this decade to drive the growth that we've outlined.
Talk to us then about that bolt-on strategy as well. Morphosis getting a lot of attention, that acquisition. How confident are you that it's going to pass kind of the regulator's ire? And if it does, how many more deals are in the pipeline?
Yeah, we feel good about the bolt-on approach. I don't want to comment on any specific company, especially because we're, especially the Morphosis, we have the tender offer ongoing. But overall, we feel very good about this approach of bolting on. We've done over 15 deals in the recent quarters, mostly focused in our core therapeutic areas or our core technology areas. You saw many deals in radioligand therapy or RNA therapeutics. And so we think this is the right approach to take those bets earlier on in the development life cycle of a drug or in a company, and then bring them into Novartis, and then we do the later stage development. We find it harder and harder to create value for larger acquisitions where I think that the drugs are already on the market or they're very well modeled by the street. So that's the approach we're going to continue to take, I think, for the coming years.
What would change that? Would a large deal in the space change that, proving it can be done? I hear what you're saying in terms of the understanding of the science and you being able to model the kind of outcomes that you're looking at. But do you feel that the industry is being held back because of regulators or science right now in terms of its approach to M&A?
I think first on the first part of that question, there's always this question of does the industry need further consolidation? And I think the biggest topic with respect to that is where do you really get better R&D performance? And it's not been historically shown that when you bring large companies together, large portfolios together, you get better replacement power and innovation performance. Often you have two disrupted R&D organizations and two disrupted pipelines. So that's been, I think, the difficult thing to solve in our sector when we think about very large M&A. Now, when we think about more bolt-on M&A, this is primarily a science topic in my mind. While we know the XBI continues to hover around relative lows from where it's been in the last decade, we still are primarily driven not by valuation, but by the quality of the science. And I think what we're seeing now is as capital has flowed out of the biotech system, we see a lot more scrutiny and a lot more pressure on biotechs to actually have to show, do they actually have strong data? And when we look at that data, that's really what's driving our M&A and BD&L approach. So that's why we think the biggest opportunities are earlier stage. These companies that are early need some support from a large company like us that hopefully can bring these innovations forward.
All right, Narasimhan, Novartis' CEO, we thank you so much for joining the program this morning.